I think people are missing is the halving coming up in a couple months, and that's going to double the fair value. I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. So then we get 75. In the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. That seems fair. So we go from 75 to 150. Leverage is what really drives the parabolic blow-off number.
Welcome to our YouTube channel. Mark Yusko begins by discussing Bitcoin's fair value and how it evolves through different market cycles. He suggests that the fair value of Bitcoin is currently around $75,000. This figure is expected to rise to $100,000 following the next halving event, a key moment in Bitcoin's predetermined issuance schedule where the reward for mining new blocks is halved, effectively reducing the supply of new Bitcoin entering the market. Yusko notes that the current market has less leverage compared to previous cycles due to regulatory crackdowns on major exchanges like Binance, Voyager, and Celsius. In past cycles, leverage drove Bitcoin prices to 2.3 to 2.6 times their fair value. This time, he anticipates a maximum of 2 times the fair value, projecting Bitcoin could reach around $150,000 at the peak of this cycle. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think 75 is the new fair value. Well, we'll move from now to the halving to the 50. Then post-halving, 50 to 75. How fast? I don't know. It doesn't really matter. So then we get 75. Well, now the traders and the speculators and eventually the gamblers. Well, this cycle, I think there's less leverage, right? They clamp down on Binance and they clamp down on Voyager and Celsius. And so there's just less leverage. So let's say in the previous cycles, we went 2.3 times to 2.6 times fair value. Let's say this time we only go 2 times fair value. That seems fair. So we go from 75 to 150. Now, that 150 has some volatility to it. You can't predict a point. So if there's more speculation, we get a little higher than 150. If there's less speculation, you get a little less. But somewhere in that 150 range seems, I won't say guaranteed, but seems highly logical for the high point of this cycle. Does it have to be 150? Could it be 180? Sure. Could it be 120? I don't know. I've seen a lot of smart people predicting anywhere from 100K to 120K, 104K, Tommy Mustache, Tim Peterson's at 104K. Somebody else was at 120. Now, Max is out there. Oh, it's going to be 250. There's going to be a God candle. I love Max. I love Stacy, but I don't see that. I think there's not enough leverage to get us there. So, I'm a 150 guy. We're going to have the 40x move like we did when it went from $1 to $40. Well, it's a hell of a lot harder to go up 40x when you're $100 or $1,000 than it is when you're $1. So that's the first thing. The second thing is leverage is what really drives the parabolic blow-off number. So whatever that number is, right? When you're under fair value, normal investors are buying, because that's what investors do. They accumulate assets below fair value. They don't like to buy above fair value, but they will. And then a speculator is actually just the opposite of a hedger, right? It's actually a term of art. So if I'm an oil producer I have to sell my production forward in the futures market. So I'm a hedger. I need a speculator to come in and take the long side of that sale. Same thing with, I'm a Bitcoin miner. I need to hedge my production. I need a speculator to come and buy. So that's not good or bad, but that speculator is providing capital, net new capital that moves the demand. But then the gamblers come in, and the gamblers borrow money to increase the amount of demand even more. And that's where you start to get this parabola. So two things I think happen this cycle. One is, I believe the halving cycle, the doubling of fair value, is contingent on the fact that block rewards are cut in half. Therefore, miners would be in trouble if the price didn't move. But what about ordinals? Now we have ordinals and we have transaction fees. So let's say, and again, I'm going to make these numbers up. Let's say that impact is 50%, meaning we're going to have 50% less upside from the reduction of block rewards because the miners can make up some ground through transaction fees. So let's say we go to 75 instead of 100. That's actually where I think we're going to go. Call it 75 to 80. Just to be conservative, we'll keep it 75 because of transaction fees. Now, I guess if Luke Dasher gets his way and we fork off and we have no more ordinals and no more transaction fees, then we're back to 100. But I don't think that's going to happen. What I think people are missing is the halving coming up in a couple months, and that's going to double the fair value. So fair value today is somewhere low 50s. We'll just call it 50 to round numbers. The halving doubles fair value. Well, why is that? Well, you think about it. If the block rewards get cut in half of the miners would suddenly go out of business because their costs are fixed. So the price actually has to rise. Well, it doesn't have to rise, but it does rise because buyers and sellers are going to equilibrate, and no one's going to sell unless they get a better price because they got to cover their costs. So there's a supply-demand change, and because the supply shrinks and the price goes up. So that's interesting. So that says that the fair value would be 100. Well, by summer this year, we'll enter what's called crypto fall. So we're in crypto summer right now. Crypto fall is where we get the parabolic craziness. And it's likely that, through year end this year, we'll have some craziness. I don't know how high we go, but we'll probably go really high. And then, we'll have another bear market and we'll enter crypto winter, in 25. But anyway, that's kind of what I see happening.
Mark highlights the growing involvement of institutional investors, with significant inflows from firms like BlackRock and Fidelity, which have already launched Bitcoin ETFs with substantial initial investments. He anticipates that regulatory clarity and new financial products will continue to drive institutional adoption, increasing demand for Bitcoin. Yusko reflects on the recent launch of Bitcoin ETFs, noting that while initial inflows were slightly lower than expected, the overall performance has been robust. He believes that the presence of short sellers and the introduction of new futures at the CME contributed to the market's initial volatility. Despite this, he remains optimistic about the long-term impact of these ETFs on Bitcoin's price.
I thought the inflows would be more 10 billion-ish in the first few days, and we only had, more like 3-4. So that surprised me a little bit. On the other side, it played out almost exactly how I thought it would. You had the inflows coming in, which were robust. BlackRock's up to over 3 billion, Fidelity's at 2 billion, Bitwise and ARK are nipping at their heels at just under $1 billion. So that's all great. But the outflows from GBTC were expected as well. But I think people kind of didn't think about that when they were thinking about, number go up as soon as the demand increases. And the part that I really didn't anticipate, although I did tweet out about this a little bit, there was a little known change that was happening the same day as the approval of the ETFs, which was there was a new line of futures being introduced at CME. And basically what that means is there were going to be a whole bunch more short sellers on the other side. So I think what happened, I don't have any inside baseball, but what I think happened was some of the big dogs accumulated Bitcoin leading up to the launch and, in accounts. And that pushed us from kind of 40K up to that, momentary spike to 47. And then you have the launch and they start selling to themselves, right? So they could secure supply. But then the people shorting the futures jump on and you had the, flash crash down and everybody said, oh, see, it's a total failure. I'm like, what are you talking about? You don't judge a launch in minutes or days. And just for perspective, right? 2 of the 3, the BlackRock and the Fidelity are number 5 and number 8, I think, of the top 10 selling ETFs in the world. That's pretty cool. And together, the newborn 9 did better than the entire class of 2023. So, you can call it whatever you want. And, the fact that we're not at 100K Bitcoin, I don't know why anyone thought we were going to be at 100K Bitcoin overnight. It's a long answer, but I'll give you one last thing. I made a statement leading up that, there's 30 trillion in accounts managed by UBS, Merrill Lynch, Raymond James, Vanguard, etc., controlled by, advisors, boomer money. And I said at least 10 basis points of that is going in this year. So that's 30 billion. I actually think 1%, 100 basis points, is going in, and that's 300 billion. And I think I'm right on this. That 300 billion would be more fiat converted into Bitcoin than all of the history of Bitcoin. And I can't prove that, but I think I'm right in that so much of Bitcoin's market cap is not $1 went in and $1 market cap. It was $1 went in that's now worth $100 or $1,000 or $25. And so that 300 billion that I think is coming is going to move price pretty dramatically in the future.
Yusko expects Bitcoin to experience a cycle of high volatility and significant growth, followed by a bear market or crypto winter in 2025. He anticipates that the increasing adoption by institutional investors and the gradual integration of Bitcoin into traditional financial portfolios will drive sustained growth in the market. Yusko emphasizes the potential impact of institutional capital on Bitcoin's market cap. He predicts that a small percentage of the total assets managed by major financial institutions, even as little as 10 basis points, could result in significant inflows into Bitcoin. He estimates that up to $300 billion could enter the market, surpassing all historical investments in Bitcoin and driving substantial price increases. Please like and subscribe my channel.